Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, April 6th. I hope you guys had a wonderful Easter Passover weekend here. We'll start. We do got kind of light economic news week this week. The big one will actually be on Wednesday when they release the FOMC minutes. But today we got the ISM non-manufacturing, or also known as ISM services. So this kind of gives an indicator of the services industry. And back in February we had a 56.9. So anything above 50% is considered expansion. Anything below, of course, is a contraction. So it was supposed to drop down to 56%, but it came in at 56.5. So it did come down a little bit lower, but better than expectations, which is obviously good news right there. Stock market is currently up, so it did start off the morning actually much lower today after the jobs reports came in on Friday, and because the market was closed, so it came in initially lower. But when the ISM services came out, it kind of went flatline and it kind of moved up. There were some comments moved by Fed member Dudley, which kind of probably helped a little bit, but he had made some points that the Fed should probably be raising interest rates much slower. He thinks there's three factors that could kick in that kind of affected things in the first quarter, or these jobs numbers, and that one was, of course, weather in the Northeast and the Midwest. Second was the stronger dollar, so we're having a harder time with the exports to be able to get other countries to buy. They're having bad economic times, still not good economic times overseas on the global front, and with the stronger dollar, it's not going to help things. And then three was the lower cost of pricing. So the energy sector is having a hard time, and I believe are also having some layouts as a result with the lower gasoline prices that we're currently seeing. So this also kind of initially led the investors with concerns about first quarter corporate earnings reports as well, with these type of numbers, and with the fear of maybe the Fed raising rates sooner than later type of thing, that they would potentially it would exacerbate the issue even further, especially with the numbers not looking as good. But right now, it looks like June is almost out the table for it. September was dropped lower, but there are actually a lot of them are actually thinking the best time they'll probably raise rates will probably around December. So we'll kind of wait and see things how progress, see if it picks up in the second quarter, even though second and third quarter typically a little bit lower, and then fourth quarter usually picks up. But we'll kind of wait and see how things proceed. On the other hand, the bond market is down from what the futures numbers, what we saw. Remember, this was down Friday. We had it open slightly for about 3 hours. The bond market, we're down a little bit from Friday, but because a lot of people didn't put their pricing in lock desk and stuff like that since Thursday, we're kind of about slightly better than what we were on Thursday. So it depends on the lender if they were open or not, or taking locks on Friday or not. We're down from Fridays, but like for us, example, we're using alpha Thursdays, we're better price than where we were on Thursday. All right. Hey, I hope you guys have a wonderful week. And again, this will be kind of a little lighter this week in terms of news. There'll probably be more on corporate earnings reports once they come out, as to especially when we had the first quarter ending. That would be kind of dictating the market. But the Fed FOMC minutes will kind of take the lead on economic news in terms of on Wednesday's numbers. All right, have a wonderful day. Again, thanks so much for watching, and we'll catch you guys tomorrow. Take care.